Imagine doing everything right. You go to school, you get a decent job, you meet someone who's also working hard, and together you're earning more money than your parents ever did at your age. 2 incomes, stable paychecks, no wild spending habits. And yet, when you sit down and run the numbers, the dream still doesn't work. You're staring at a home listing on your phone, and instead of excitement, you feel this quiet panic in your chest. Because somehow, in 2026, 2 full-time incomes still aren't enough to buy a home. Nobody wants to admit why. Stay with me, because by the end of this video, you'll understand the hidden truth behind what's really going on. And once you see it, you won't be able to unsee it. Let me start with a quick story that might sound uncomfortably familiar. Imagine a couple in their early 30s. Let's call them Jake and Emily. Jake works in tech support. Emily works in healthcare administration. Together, they earn about $120,000 a year before taxes. That sounds like good money, right? 10 or 15 years ago, that would have put them comfortably in the middle class. Their parents hear that number and say, "You guys are doing great." But here's the problem. Jake and Emily aren't living in some luxury bubble. They're renting a modest apartment. They don't drive fancy cars. They don't take extravagant vacations. They're just trying to save for a down payment. And every single month, it feels like the goalpost moves further away. Before we go any further, if you care about understanding money, housing, and the systems that quietly shape your life, make sure you like this video and subscribe to the channel. This is The Hidden Guy. And on this channel, we talk about the financial truths most people don't explain honestly. Subscribing helps more people see this, and it tells the algorithm this conversation matters. Now, let's talk numbers, because this isn't just a feeling. This is math. In 2026, the median home price in the United States is hovering around the mid-$400,000 range. Let's say Jake and Emily find a home for $450,000. A pretty normal, nothing special house. With today's lending standards, they're told they need at least 20% down to avoid PMI. That's $90,000 up front. $90,000. After taxes, rent, student loans, car insurance, groceries, healthcare, and just existing, how long does it take to save $90,000? For many couples, that's 5 to 8 years of disciplined saving, and that's assuming nothing goes wrong. No medical emergency, no job loss, no surprise expenses. But let's be generous. Let's say they somehow manage a smaller down payment, maybe 10%. That's still $45,000. Then comes the mortgage. At current interest rates, even a good rate in 2026 is painful compared to what people got a few years ago. On a $405,000 loan, their monthly payment could easily land between $2,800 and $3,200, and that's before property taxes, insurance, and maintenance. Realistically, they're staring at a total housing cost of $3,500 to $4,000 a month. Now pause. Think about that. $4,000 a month just to live in a basic house. Jake and Emily take home maybe $7,200 to $7,800 a month after taxes and deductions. Half of their income is gone to housing. Half. And financial advisors will tell you that's risky. Banks will say it's within guidelines, but real life says it's fragile. One missed paycheck and the entire structure starts to wobble. Here's where the hidden truth starts to show itself. The problem isn't that people are bad with money. The problem is that the system quietly changed the rules while everyone was distracted. Go back to your parents' generation. In the 1980s and 1990s, the price-to-income ratio for homes was dramatically lower. A house might cost 3 times a single income. 1 income, not 2. 1. Today, in many areas, homes cost 6, 7, even 8 times household income. That means even doubling the income doesn't double the affordability. It just barely keeps you in the game. And here's the part no one likes to say out loud. 2 incomes didn't make housing easier. 2 incomes allowed prices to rise faster. Once, lenders, developers, and markets realized households had 2 earners. Prices adjusted accordingly. It wasn't intentional in some villainous way. It was structural. If buyers can pay more, sellers charge more. Over time, the second income stopped being a safety net and became a requirement. So now, instead of 1 income buying a home and the second income building wealth, both incomes are needed just to qualify. That's not progress. That's pressure. And it gets worse. Because while incomes have grown slowly, housing costs didn't just rise, they financialized. Homes stopped being just places to live and became investment vehicles. Hedge funds, private equity, institutional buyers, short-term rental investors, all competing in the same market as first-time buyers. When capital competes with families, capital usually wins. Jake and Emily aren't just bidding against other couples. They're bidding against cash offers, against algorithms, against investors who don't care about monthly payments because they're replaying a different game entirely. This is why people feel like they're rerunning uphill on a treadmill that's speeding up. Let's talk about the psychological side for a moment, because this matters for retention and real understanding. When two incomes still aren't enough, something breaks internally. People start blaming themselves. Maybe we didn't choose the right careers. Maybe we should have bought earlier. Maybe we're just behind. But the truth is, the system shifted faster than human expectations could adjust. You were raised on a story: work hard, be responsible, partner up, buy a home. That story hasn't been updated for the reality of 2026. And here's the most dangerous part. When housing becomes this expensive, it doesn't just affect homeowners. It affects everything. People delay having kids, they move further away from work, they stay in jobs they hate because losing income isn't an option. Two incomes become handcuffs instead of freedom. Now let me ask you something, and I want you to really think about this. What happens if one income disappears? Illness? Layoff? Burnout? Suddenly, the entire housing plan collapses. That's not stability, that's leverage. And leverage cuts both ways. This is why on The Hidden Guy, we don't just talk about money, we talk about systems. Because if you don't understand the system, you end up blaming yourself for outcomes that were statistically stacked against you. Let's zoom out even further. In 2026, property taxes are higher, insurance costs are higher, maintenance costs are higher, utilities are higher. Even after you win and buy the house, the monthly burden doesn't stop. It compounds. And unlike rent, these costs don't come with flexibility. You can't negotiate with your roof when it starts leaking. So why does it feel like everyone online still says, just buy a house? Because most advice comes from people who bought under completely different conditions: lower prices, lower rates, less competition, different math. And here's a quiet truth that almost never gets mentioned. For many couples, renting isn't a failure. It's a rational response to an irrational market. That doesn't mean home ownership is bad. It means timing and structure matter more than ideology. The real tragedy isn't that two incomes can't buy a home. The real tragedy is that people are being pressured to stretch themselves to the breaking point just to check a box society still worships. If you've made it this far, I want you to pause and drop a comment below. Are you seeing this in your own life? Two incomes, decent jobs, and still feeling locked out? Your comment helps this conversation reach more people, and it reminds others they're not alone in this. Now let's talk about the future, because this isn't about fear, it's about clarity. Housing affordability doesn't magically fix itself. It corrects through time, wages, prices, or policy. Sometimes all four. But until that happens, individuals have to play smarter, not harder. That might mean delaying a purchase, it might mean relocating, it might mean buying smaller than you imagined, or it might mean opting out entirely and building wealth in other ways while staying flexible. The most powerful move in a broken system is understanding it clearly. And that's the hidden truth of 2026. Two incomes aren't out failing because people are lazy or irresponsible. They're failing because the system quietly repriced stability itself. If this video helped you see the bigger picture, share it with someone who's feeling the same pressure. Send it to your partner, your friend, your coworker who keeps saying, I don't know what we're doing wrong. Sometimes the most valuable thing you can give someone is clarity. Make sure you're subscribed to The Hidden Guy, because we're going to keep breaking down these systems honestly, without hype or shame. And tell me in the comments what part of this hit closest to home. I read them, and they shape what we talk about next. Because once you see the truth, you stop blaming yourself, and that changes everything.